Canada's recent $12 billion electric vehicle deal with China represents more than just a financial transaction. It signals a potential paradigm shift in global manufacturing, international trade, and the fundamental structure of the world economy. This agreement carries profound implications that extend far beyond national borders. The deal encompasses the construction of new manufacturing plants, significant imports of Chinese-made EVs, and strategic technology transfers. These elements are set to redefine industrial landscapes. Its impact reverberates through financial markets, influencing stock valuations, currency exchange rates, and investment flows across various sectors. This move marks a strategic pivot for Canada, proactively securing its position within a rapidly evolving global economy. It reflects a clear ambition to become a key player in the next generation of industrial power. Such an alliance inevitably challenges the established geopolitical order, particularly within North America, introducing new dimensions of power dynamics and geopolitical risk. Welcome to Geo Capitalist, where we provide in-depth analysis of the intricate forces shaping our world. Today, we delve into the monumental Canada-China EV deal and its expansive ramifications. We invite you to subscribe to our channel for ongoing analytical breakdowns of global economics, international trade, and geopolitics. This $12 billion EV arrangement is a multifaceted construct designed to integrate Canadian and Chinese interests. At its core is the planned construction of multiple new EV manufacturing plants across Canada, signaling a significant industrial expansion. This effort is underpinned by substantial investment from several major Chinese EV manufacturers. The agreement also mandates the import of a significant volume of Chinese-made electric vehicles into the Canadian market. This influx will be governed by specific tariff structures, carefully balanced to protect domestic interests while facilitating market access. The deal operates on a decade-long time horizon, featuring phased investments and structured production ramps to ensure gradual integration. Crucially, the agreement includes provisions for technology transfer to Canadian companies. This aims to bolster Canada's indigenous technological capabilities and competitive edge. This comprehensive strategy ultimately reconfigures Canada's trade portfolio, pushing it towards greater diversification and strategic resilience. Canada has historically been an integral component of North America's auto manufacturing complex, deeply integrated with the United States. However, recent developments have prompted a reassessment of this historical reliance. Past trade disputes and shifts in global economic policy have driven a desire for greater autonomy and diversification. The USMCA agreement, while foundational, exposed inherent supply chain vulnerabilities, reinforcing Canada's need for strategic independence. Canada is now pursuing a long-term economic strategy, prioritizing durable growth over short-term political expediency. The goal is to evolve beyond mere participation, aiming to become a major independent player in the global EV market. This strategic ambition is focused on securing Canada's economic future through high-value manufacturing and technological innovation. It represents a proactive stance in redefining its industrial identity and global economic role. This Canadian deal fits seamlessly into China's broader global electric vehicle and industrial strategy. China has made monumental investments in EV technology, manufacturing capacity, and critical battery production over the last 2 decades. The deal offers a strategic pathway to the lucrative North American market, potentially circumventing future trade barriers. Furthermore, This arrangement provides a strategic outlet for China's burgeoning domestic EV overcapacity, allowing its manufacturers to expand their global footprint. It leverages China's established technological advancements and unparalleled manufacturing prowess to pursue global dominance in the EV sector. This deepening of economic influence within North America, however, carries inherent geopolitical risks for all parties involved. This deal has the potential to fundamentally reshape North American power dynamics and existing alliance structures. The United States may perceive this agreement as a direct threat, straining relations with its closest neighbor and ally. Such a move invariably impacts other regional partners, such as Mexico, potentially altering established supply chains and trade flows. Deepening economic ties with China introduces a significant geopolitical risk for Canada. It increases Canadian vulnerability to potential Chinese political and economic pressure in the future. The U.S., in response, faces a complex challenge, balancing its economic interests with the imperative of maintaining strong strategic alliances. The deal promises several immediate benefits for Canadian consumers, primarily through increased access to more affordable electric vehicles. The Canadian manufacturing sector stands to gain substantially with new job creation and significant investment inflows. This could rejuvenate industrial regions and foster economic growth. However, the influx of Chinese manufacturers will inevitably intensify competition for domestic automakers, challenging their long-standing market positions. On the financial front, the deal is expected to increase investment flows into Canada and potentially boost the Canadian dollar's strength. Shifts in employment types within the automotive sector are also anticipated, demanding workforce adaptation. Ultimately, this deal will serve as a crucial test of the long-term competitiveness and resilience of the Canadian automotive industry. U.S. policymakers confront significant constraints when formulating a response to this Canadian initiative. These include navigating complex domestic politics and intense industry pressure from established automakers. Alliance management considerations with Canada become paramount, requiring a delicate balance of engagement and persuasion. The reality is that tariffs alone are insufficient to control the intricate global EV supply chain. China's overwhelming dominance in battery production and critical mineral processing dictates a comprehensive and nuanced U.S. strategy. This development challenges the traditional U.S. leadership role in international trade and industrial policy. It necessitates a fundamental re-evaluation of U.S. approaches to trade agreements and industrial incentives to remain competitive. This deal holds significant implications for the global supply chain, primarily by establishing Canada as a routing hub for Chinese EVs. Canadian-manufactured Chinese EVs could potentially circumvent existing or future trade barriers in other critical markets, including Europe. This mechanism could profoundly reshape the global flow of goods and services, altering established trade routes. The implications extend beyond North America, impacting Europe, Asia, and emerging markets as they adjust to new trade realities. This arrangement accelerates the global economy's transition towards a more multipolar structure, with diversified centers of industrial power. It also underscores an increasing emphasis on supply chain resilience and diversification as core tenets of national economic strategy. Over the next 5 to 10 years, this deal could pave the way for deeper Canada-China economic integration, extending beyond the EV sector. This trajectory will undoubtedly provoke a recalibrated U.S. strategy, potentially involving new trade policies and industrial incentives designed to counter this shift. We could see the emergence of a more multipolar EV market, where regional powerhouses contest global dominance. Canada is positioned to become a major hub for Chinese EV manufacturing, transforming its industrial base. The U.S. response will be critical. likely manifesting in a robust package of trade policies and industrial incentives to safeguard its interests. This scenario could lead to a fragmentation of the global EV market, characterized by multiple regional powerhouses rather than a single dominant player. The overarching implications for global economic policy, geopolitical risk, and financial markets are extensive and profound. The Canada-China EV deal is a monumental development with far-reaching implications for the global economy, international trade, and geopolitical risk. It signals a potential reshaping of North American power dynamics and the fundamental structure of global supply chains. Its influence on the future of financial markets will be considerable, necessitating close observation. We invite your insights. How do you assess Canada's strategic leverage versus its potential exposure in this unprecedented agreement? And there you have it. If you found this breakdown valuable, watch our next video. It connects directly to what's unfolding. Share your views in the comments below, and don't forget to subscribe to the channel. Your support helps us decode these global shifts without compromise. This is why Canada is locking in a $12 billion EV deal with China and leaving the US behind.